Seville, and this is your executive summary. And we have a beautiful setup here happening in the market. This is some crazy action. Of course, we saw last week the market plunge all the way down to the low of 2052 and straight back up. I mean, that's some amazing movement. Of course, we assume the Federal Plunge Protection Team must have woken up and kicked in. You can see the high-frequency trading showing some of their predetermined support levels as well, right around that previous jump. And basically now we're rallying up. We've come up to this previous trend line. We can look at this kind of almost rule of three, 1, 2, 3. Had a minor test there as well, so almost 4. And then we've broken upwards of this kind of downward channel. Now, downward channels generally do break upwards, but we're also coming out of a head and shoulders that you can see here, right shoulder, test, and then the break, and now the rally up. So basically, the question here is, technically speaking, how valid is this breakout? Now, obviously, what we look at generally is volume, and you can see that we had some massive volume last week. You know, we had 3.72 billion shares down on Tuesday, August 11th, then 4.27 billion on the way back up, 3.23 billion. Then it's just started to dry up. We had 2.8, 2.87. 2.95. It's kind of dropped back significantly. So we're not seeing a huge conviction in the volume anyway, but what we are seeing is we're seeing that the Twigs money flow is showing that more money is coming in. We have these higher lows and the higher highs, even though we have lower highs in the price of the index. So that's one bullish thing. Now, we are obviously still bearish on the market. Does that mean that we can't go up further before we start to crash? Of course not. But that's why we have to look at independently very weak stocks, so that if the market rallies another 20, 25 points, then we're okay. And that's the true test of the alpha of the strategy. Now, I mean, if we were to rally, that would kind of complete a complex head and shoulder type of formation within this pattern. But there's a lot of other stuff going on here, so I don't really want to think of trying to predict too much in terms of the pattern, because it could be something else. But that's basically the formations we're working with now. So where would we get to if that was the case? We'd be looking at kind of rallying up somewhere between the 21.15 and 21.25 area. Remember, the options expiration is at the end of the week, so that will give us the open range for the options day. And that would, if we were to rally up into that, that would, in my opinion, be the perfect time to then load up on some more aggressive shorts. Now, what type of shorts are still performing, even with a rallying market like this? Excuse me. Well, have a look at things like Las Vegas Sands. This is one of our selections from our the big one. Obviously, you can see here, this is not going anywhere. I hold December $50 puts on this, which I picked up at $2.73. They're currently at $3.49. That hasn't gone anywhere but down. Again, we've had performance across the industry in stocks that are following the market, but we're looking for these types of positions that perform regardless. Okay, so let's crack over to having a look at some of the stocks. Now, you may remember last week in the executive summary we talked about Zoe's with a massive P/E ratio of over 1,200. Now, Zoe's had a beautiful drop today. So again, the lift in the market was not reciprocated by this stock. In fact, in all that drive up we've had recently, this has just continued to follow its downtrend down, hugging these moving averages, obeying the 50, obeying the 9, obeying the 20, obeying the 9, and just dropping away. So we had a 7.52% drop on that. So anyone in on that trade would have done great. If you were in the options on this one, you would have done awesome. So there's Zoe's. And those are, again, the types of things that we're really looking for. Now, in terms of new potential positions, we'll have a quick look at, well, actually, no, let's touch on the ones from last night real quickly, because the one that I'm really excited about And this is a very speculative position, but in last night's executive summary, I mentioned that I liked SPNC, that Williams Jennings had just bought a bunch on the inside, about 120, 150,000, if I remember correctly. He was also an insider for ACLS, where he bought $1.85. It's now in the high $2 range, but it rode up all the way up into the threes before it started to break down a bit. I mean, this guy's got a good nose, and a lot of the other directors involved in this company have had some good buys as well on stocks that they've been involved in. So I liked that kind of interesting story behind it, and this has been slaughtered by bad news, lawsuits, things like that. But I mean, the stock's got has had a really big run, and as you can see, we're coming down to some key support in around late August, early September of 2013. So that's interesting. And what's also interesting is that we get this nice smooth pattern where the stock was rolling under the 5 and breaking up. So we picked this as a long last night. That rallied 5.93%. I picked up options on this because I'm looking at this as a speculative trade, so I wanted to basically put only risk capital in. So I bought a bunch of, what did I buy here? I'm just checking. I should know. $17.50 calls, and those did great today. Those were up, let's have a look here. They're up about 48% towards the end of the day. So that's what we call a nice quick turnaround. Now I'm still holding these, and they are January expiration. So we have plenty of time. And if this can get anywhere up to close to the $22 mark or $20 mark, I mean that's what pharmaceutical stocks can do, and that's why they're kind of a bit of insurance against bad markets. Love this one. So I wanted to touch on that. ARRY is another kind of similar story we talked about last night. It's yet to break out, but I am watching this one closely tomorrow. Now, to one of the stocks that didn't make my list last night but will make it tonight is KNDI, which is Kandi Technologies. Now, what I didn't like about them, I try not to spend more than about 3 to 5 seconds per stock. I mean, when we run our scan, we get 20 stocks to look at that meet our parameters, so you want to kind of run through them quickly and say, yep, yep, no, no, and build your short list of candidates. Now, KNDI wasn't quite what I was looking for because it was in the automotive industry. And given all what's going on with oil and the tightening of credit potentially around the world, a massive credit crunch potentially looming, obviously the subprimes and the oil, and these can all affect the auto manufacturers negatively, but this is actually not a, this is a different type of situation. This is an electric car. I don't know a lot about the company, but it's got a lot of good things going for it. It's got a low P/E ratio of 12. It's got earnings per share of about 59 cents, and it's obviously come down as well, like a lot of stocks, to some kind of key support levels after the run-up it's had all the way up to 22, is now all the way down here. Now, if we have a look at this kind of pattern here, you can see that we've got a possibility for this to run quite a fair way up if it was to recover. So this is one of the things that I liked about it, was the way that it was forming up. And if we just zoom in a little bit, there we go. Okay, you can see that it's had this kind of consistently long downtrend line. Now, where is this line coming from? It's coming from all of these different peaks connecting across the same gradient that we've run into today as well. We've also got the moving average coming in on top of it here, you can see. So we've got this trend line and that moving average to overcome. If you have a look, we've got some good money flow divergence. You can look at the difference between May 15 and now. We're making lower prices but higher money flow. But as you can see, there's a kind of a perfect storm of resistance right around this $8 mark. And if we go back and zoom in to where this big rally kind of stemmed from, around $8, you can see this big breakout here, kind of a flag formation. Let's zoom in there. You can basically see that's where the breakout point was. That's where the volume went from 926,000 to 5.83 million. So big breakout, significant resistance, and then if we look at that same level, we can just make that one a little bit bigger so you can see it when we change back. Oh, let's reset the zoom there. There you can see that's right where we're at also. Okay, so that's kind of where that perfect storm resistance happens. So I don't really want to wait for it to break through that. I'm more the type of trader in these types of markets where the conditions for the market to be able to go long in could be only 3 to 5 days, if at all. So I would be looking at getting the right risk reward. So I'd look for a pullback kind of down to this 736 area and look for a rally up. Might take some profit around this resistance and see where it goes from there. Then if it catches the new support, because these moving averages will rise up, then wait for it to pull back to that, then buy in the breakout. So kind of a two-pronged trade. Of course, the other option is just to hold on to it and let it run. So KNDI looks interesting. And one of the kind of very contrarian watch list stocks I have is Joy. Now, I mean, 50% of their money comes from coal, and coal's in the tank at the moment, and some of their big customers are all in trouble. So, but they have a very strong money flow divergence, and you can see that this squeeze is occurring right here towards the end of the chart. So I'm looking for these two moving averages to kind of cross over for the stock to break through, and that's only a very small distance away, and then we could be getting a really nice run right up to this area around $30. So beautiful potential return. I mean, from just above 26 up to 30, we're looking at just under 20%, and I'd throw a stop loss underneath the low of whichever candle breaks through that on. And for a couple of shorts, KLAC, those following our big the big one course will know all about this one. But we bought puts on this today. This was a nice little trade. We got an average price. We've got a bunch of different puts over a couple of days, but the average price we got on these are 227 on the January 47.50 puts, and we've got an average price here 253, and they're currently what are they currently sitting at here? It's currently saying 221, but that's based on the aftermarket, the bid and ask median price. But those were up about 30–40% today as well. So that could be looking really good for tomorrow's market also on KLAC. And the last one for tonight is NSR, New Star. So New Star's looking great as a short. Again, you can see the big money flow drop out coming out of this support zone. The stock's going higher, money flow is going significantly lower, and this is a communications tech company. There's been some pretty big insider selling. Consider there hasn't been any insider selling on this for quite a while. So again, looking at this as a possible play, and I'd want to see it break that trend line first to kind of get that confirmation. It's going to hit those moving averages as well, so those are things to be kind of considering. But it's definitely got some potential. And the way I was looking at possibly playing that was some $27 puts, which are currently got a $1.50, excuse me, the January $27 puts. Last price was $185, bids at $150, and the ask is at $215. So that's something I'm looking at as well. So that's the stocks that I wanted to cover. Now, of course, for those of you who are maybe new to us or who are trying to learn how we find these types of positions, I highly recommend that you join in to our complimentary stock scanning workshop tomorrow. And for those of you who are already members, you should have had that invitation to tomorrow's class already. Now, this is going to be where we're going to be looking at these factors affecting this market and some of our favorite stocks that we're currently trading or about to trade, and also how we go about trying to find positions like NSR. So the stock scanning workshop, which is going to be titled Capturing the Crash, is on tomorrow. That is Wednesday at 1:30 Pacific, 4:30 Eastern. 1:30 Pacific, 4:30 Eastern. It is limited to 500 people. We're at about 2/3 capacity now, so register quickly. You can do that by going to acornwealthcorp.com/event, and we look forward to seeing you all there. Okay, well, that's your executive summary for tonight, and happy trading.